negative correlation for the S&P 500. Why that is important is because the dollar is going straight up. We went through and through profit targets of our traditional long setups that we had, and then we had extension long levels as we were going into our afternoon yesterday. And you can see here that we've lifted off overnight. The dollar is dragging the indices and the currencies and even the precious metals down. There is a flight to safety into the US dollar. And as we're going into our morning, everything above this extension long level is bullish for the dollar and is literally bearish for everything else. There's two things that go up in a panic: the dollar and the VIX. Everything else goes down. Everything else goes down. And so we haven't had much of a negative correlation inside of our indices, currencies, and commodities. There have been a lot of neutral kind of relationships. But as of yesterday, and then overnight here, we're seeing that very dramatic inverse correlation inside of our broad markets. So this dollar extension long level represents a risk-off environment in US dollar terms. The denominator of everything priced is everything priced in US dollars. Let's move on here to bank. Bank squeezed right into resistance. We were anticipating a squeeze into resistance yesterday. We had a counter trend squeeze in the morning that we were grinding higher for most of the day, and we ran right into resistance at the end of the day here. We're going to open up, and we'll see where we open up here. We might even be breaking bank's lows at the open. What we're watching for here is our Monday's highs to whatever our lows are. A trading hours 50% short. We don't know what that looks like yet until the market opens. Let's move on here to the VIX. The VIX had a long setup. This is a trading hours long from lows. There was already a daily support level, but there was a huge development in the VIX here as we were going into our overnight time frame. We broke out of a daily short setup, and that confirms the VIXplosion situation. We had the 55s as a line in the sand. We dipped right one tick into that and recognized it, yesterday afternoon. And then in the afternoon and then overnight, we're just slowly grinding higher here. And this is at 10%. We're up 10% on the VIX. This is why the VIX, it's better to be long the VIX than it is to be short the indices. Now, they both move inverse or opposite of one another, but on a percentage basis, what is the ES down? 1.7%. 1.7%. Let's just round up to 2. Let's just give the ES its 2%. It's down 2%. Rounding, right? What is the VIX up? It's up 10%. It's 5x, right? On a percentage basis. That's why the Chris Coles of the world and the Dragon portfolios of the world, buy volatility when there's uncertainty because it outperforms indices shorts. And so we always choose the VIX from the perspective of, if we're anticipating a bearish type of environment inside the broad markets, the VIX is more technical, it has better risk reward ratios, and it outperforms, in this case, 5-1 by 5x. And we're rounding. So what we're watching here as we're going into our morning 4 is we're looking at this from the perspective of what's that next measured move. Well, there's just a very normal pullback from our lows of the week to highs of the week. Yesterday, we had a short setup in the morning that led us to the counter trend squeeze on the VIX. So this is what led us to the... This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.